Good afternoon, everybody. Welcome to our Short Verticals webcast. I'm Connie Hill. Happy that you joined me here today. And we get together this time every week to talk about a strategy I know some of you really enjoy, which is short verticals. Now, I have a question. If you are getting used to the process we've been following over the last few weeks, looking for specific stocks on a watch list we've identified, seeing if we have a bullish entry or a bearish entry. More recently has been a little bit more bullish. How many of you are just kind of starting to follow that process? I hope that you are, and we're going to just do it again here today. I am joined in the chat by Cameron May. I'm glad Cameron's here. He's here to catch maybe some questions that I can't quite get to. So as you have those questions, go ahead and ask them. I'll keep my eye on the chat as well. And if you're listening to this on the recording, I know there are lots of you that do. When you have a question, type it in the comments in YouTube, because we go back and look at those every day, make sure that we get your questions answered quickly for you as well. Now, I hope you are following us, coaches. All right, I'm Connie Hill CS. Cameron is Cameron May CS, and that's on X. And we'll post educational content throughout the day. In fact, I put a little kind of teaser out there today for our class that we'll follow up with here in just a little bit. Let's go through the disclosures and talk about what our agenda is going to look like today. Options carry a high level of risk and are not suitable for all investors. What we talk about today is for education and information. Don't consider it a recommendation. Investing involves risk, including the loss of principal. We will be using the Paper Money software application. That's what you download to your computer. It's for educational purposes as well. I think it's a fantastic place for you to practice short verticals and get good at your routines with the short verticals before you jump over to your live account. Past performance of any security or strategy does not guarantee future results or success. One thing we like to tell you about is that short options can be assigned at any time up to expiration, regardless of the in-the-money amount. The Paper Money looks and acts a little bit different than your live account will on this end. It will not assign you early. Paper Money won't, okay? So we like to point that out to you so you don't get a false sense of security thinking, man, my option goes in the money and I'm never assigned. This is cool, all right? Make you aware of that difference. All right, I hope you are making an effort, when convenient, to join us at our events. You will love them. If you have not been to one of our events before, take the time, if it's convenient, to either drive there or, you know, if you want a short little vacation in New York or Chicago coming up. It's obviously the summertime, right? Great time to do some visiting. So we're going to be in New York this Saturday. We'll be back in New York August 8th and 9th for an options and technical analysis workshop, and then again in Chicago on the 15th. So we'd love to see you there. Coming up this weekend, we should have Barb Armstrong and Ben Watson. We're going to be at that Market Drive event in New York, so take advantage of it. And I've seen some of you kind of say that you're planning to come to New York, and I'm happy that you are. Now, in this class, we talk about short verticals and only short verticals. So we've got a bullish version and a bearish version. And the market's, you know, the way the market's been going, most of our trades more recently, example trades, have been on the bullish side of things. But I do like to discuss, you know, maybe one aspect of short verticals. I know this is an intermediate level class, but some of you are still fairly new to the strategy. So I don't want you to be lost. I want you to be able to follow along. So we'll talk about a couple of concepts here before we go looking at some of our trade examples, as well as some of our trades we've got on or did have on, and show you kind of how they ended up. Now, we didn't have our class last week. Hopefully you were out enjoying Juneteenth. And so we didn't have our class. So we're going to follow up on some things from a couple of weeks ago. And guess what? Next week, it's going to be the 4th of July. Actually, it's going to be the 3rd of July. The 4th is on Friday, but we will be ending our programming early, so we will not have class next Thursday. So I wanted you to be aware of that. All right, somebody said it is Survey Thursday, okay, because that means there is a survey out in the chat. We'll just go to it real quick here. You guys know from time to time we'll put a chat out there just to kind of see how you're feeling about our classes. Really easy, 2 buttons. You just go plop, plop in the radio button what your feelings are on a scale of 1 to 10. And then there's a spot for you to answer a couple questions if you would like. And I also encourage you to use it as some space if you want to communicate something with me, to do it, because I love to incorporate maybe some of the concerns you have or problems that you're dealing with as you're learning this strategy. Incorporate them into our class and help you have some solutions there. So you can use that real estate for that as well. All right, let's take a look at one aspect of short verticals here. We're going to be focusing on short verticals. It's probably not a big surprise to you. The market's been quite bullish. NASDAQ put in another all-time high here earlier today. And so just some things to keep in mind with a short put vertical strategy. And what I would want you to maybe consider is it doesn't have to be perfect, meaning you don't have to nail the entry to have the perfect trade. What's really nice about short verticals is if it goes up like you think it will, because it's bullish, that works out well. If it kind of dawdles along sideways, usually, that can work out as well. It could even pull back a little bit as long as it doesn't go past your short strike price. It's when it comes down significantly and expires in the money or below your strike price, that's when assignment occurs, and it's not always a horrible deal if that happens. Just have to understand that, there's still 3 ways that you can profit. Actually, 3 ways you can profit on a short vertical trade. We always know we're going to have a maximum gain. We always know what that is. We have a maximum theoretical loss at the beginning. So we know how low it could possibly go if everything in the trade goes wrong come options expiration day, what our max theoretical loss would be. And it's nice to know those terms going into the trade, okay? On your break-even point, because we'll talk about break-evens here a little bit, it's always going to be the short strike price, at the difference between your short strike price and the credit that you receive. And that's really kind of where we get that max loss from. Okay, so let's get busy. We're going to start first with some of our trades that we've followed a process on that I'm hoping you're getting used to the process, okay? And what happens with it. So let's head out to our Thinkorswim. Look at the markets just real quick. S&P, man, it's getting close to this high that it had here in I was going to say, it's not showing me the correct data. It should be February, what is that? February 19th, okay? That high, February 19th. Man, it is so close to that. It's currently at 61.39 and that peak is at 61.47. So yeah, definitely up in that area. And it'll be interesting to see if it can bust through it or if this acts as a little bit of resistance for the markets. And of course, the S&P is a good gauge of the overall market. Let's also look at the NASDAQ. Let's look at NDX here. Now, I don't have its previous high showing over here, but we do see, look at that, so new all-time high, 22,443 is where it got to today. And yeah, so as the markets are just kind of churning along, moving along, we're starting to see, because of these highs and getting back to previous highs, we're starting to see some really strong uptrends in a lot of different stocks, in a lot of different sectors. The VIX, as you know, something that we'll take a look at, has been lower and it's been dropping more recently. So as the markets have become a lot less fearful, this VIX has been dropping down from the low 20s that it was in. Looks like right now it's down to 16.3. And so the idea, when the volatility is lower, fear is lower, concern is lower, and we typically see the markets doing the opposite of what the VIX is doing. So if the VIX is headed down, typically we see the markets heading up. All right. Now let's just come over here to the monitor tab. And Let's so. Well, I'll just show you what we've got left in our account. We only have one trade left in our account because our others have executed. I'm going to show them to you here in a minute. Gilead, we're down a little bit on. In fact, it's been good to us today. It has still a little bit of time before it expires. We've got 22 days there. And we've been in this trade for a little bit of time. We've been here since June 5th. So let me show you what the chart looks like and kind of what the management plan is for Gilead. Knowing that we have quite a bit of time is useful and helpful for us to know. It's not like we are in a window that many traders like to use to close out their trades that 5 to 10 days before the option expires. Some traders start winding down some of those trades. They don't want to be stuck in a bad situation where maybe they were in a good situation and it makes a big move and doesn't have time to recover. So we're looking to many times get out early. So as we look over here, let's just pull up Gilead. And on Gilead, let's just kind of zoom in where we were here. It had been trading. Here's this nice strong flagpole, kind of dawdled around a little bit, and then it broke out. And that's the day that we were looking at it and that we got into the trade the first time, and we got out the next time. So we said, okay, fine, we like that. Now we're seeing a nice little bounce here. We'll get in. Again, it's bouncing off that blue 10-period moving average. The red one is a 30, and I'll typically keep those up because short verticals usually are not really long trades. They're just kind of short-term to intermediate-term type trades. So that's why we're focusing on those two moving averages to identify the trend. Now, when we got in here, it went up for a little bit, but it's kind of just been pulling back, pulling back, pulling back. But our short leg here is at 105. It went below it a little bit yesterday, but really has not been threatening to that at all. And this kind of fits the scenario that I was talking about, that, you can get into your trade and it can go sideways and it can work out, and it can go up and it can work out. And it can even pull back a little bit, and it still could work out. What we're just trying to avoid is this, staying below the 105 area, okay, or breaking a major support level. And it looks like it's kind of found some support in that area, maybe 105, 106-ish, okay? What's it doing right now? Well, today it looks maybe like it's starting to bounce off over there. So we've got 22 days. The market's putting in new highs. Maybe this will move this little stock around a little bit more. All right. What has worked well for us? Well, there are a couple of trades that we got into that I'm just going to show you what happened to them. On every trade, and this is part of our process, on every trade, we'll go ahead and we'll put in an exit order. And the exit order is to exit if we get a chunk of the credit that we initially sold for. If we get a chunk of it, we're going to lock in our gains. We're going to get out of Dodge. Okay, we're going to just take it and look for a new trade. And we've been doing that typically at around 70 or 75%. Some people like to use 80%. You get to decide what that percentage is. But when we put it in initially, our intent is, if the trade goes there, lock it in for us. Don't make us babysit the trade. So here's Marvell. And we got in on this day where the green oval is. It looked like it was trying to break out of this flag pattern. And sure enough, it went up, and then it got out here the day before Juneteenth. Okay, so this was on the 18th. It went ahead. It hit our target that we put in there. And that's why I'll color them in gold. It was like, this is where we exited, and it was with a profit. So I'm putting it like gold, right? Gold is kind of a positive color there. We initially sold it for $1.32. We bought it back for 39 cents. We had 4 contracts on that, which is something I want to show you here. We ended up with a $372 net gain on those contracts. So kind of these are not real big trades. They're higher probability trades where we're trading off for maybe a lower return for the high probability. Now, some of you might be going, this is looking pretty cool because it looks like Marvell broke out today. I'm going to ask you a question here. Was it worth it to us to get out here? Okay. It ran up here. It took us out pretty early in the day, and then that candle faded, and then it had a bearish candle, then it had another bearish candle. And during these 2 days, you might be thinking, oh my goodness, I'm so glad we got out because it pulled back on us. We're just going to go and see what it looks like today. If we had held on, what's the value of that? Okay, so we're going to go to our account statement. We're going to bring up Marvell. And here is our trade that we exited out of on the 18th here, okay, for that 39 cents. And I'm just going to say create a duplicate order. We're going to bring it up, and I'm going to unlock it here to see, okay, what is it going for right now? Okay, if we had held on, it looks like the midpoint of that trade right now is at about 12 cents. The natural price is about 13 cents. So we bought it back at 39 cents. So did we leave some money on the table? We did. However, is it worth it? You kind of get to decide that. We decided up front, if we got a chunk, we were going to take it. And we knew there was the possibility that we might be getting out early, but our preference was to get out early and not try to milk the trade for everything it's worth, right? I've talked to you in the past about, trying to squish every little bit out of the toothpaste container. And sometimes that's not the way some traders like to trade short verticals. They like, if I get all the toothpaste, a bunch of the toothpaste out, let's move on, okay? So I just wanted to kind of show you that because sometimes I know some of you might have that question. Another trade that we need to follow up on is PanW, and this one we did a couple of weeks ago, our last class. We did the same thing with it. It's on our list of stocks that we're interested in trading. It had a nice little breakout of this flag pattern, and it didn't move super quickly, okay, but it just kind of churned its way up, and finally yesterday, it hit the predetermined target that we had. So we didn't have to catch it, think or swim. We'll sit out there with that order and that platform, execute it when the condition is met. So, you can be out enjoying yourself, golfing, biking, shopping, whatever it is you like to do, and not have to sit here and stare at your computer trying to catch a trade that's working in your favor. Okay, so that is part of the process that we've been integrating here. Let's see, let's leave it at that point. Okay, Gilead, we're just going to let it work. We've got 22 more days. We're happy about that. There was another trade we could follow up on, but I'd rather spend some time on some new opportunities because I've got a boatload here. And it's been a little bit of time since we updated our watch list. And the last time we did it, I had a couple of technical issues and it was not the smoothest demonstration. Okay, so I want to show this to you again, and we're changing the parameters a little bit of this watch list. So let's head over to the scan tab and let me reset it. We're going to just do a reset here. Yeah, we're going to do a reset. There we go. There's the yes button. We're not going to put a lot of parameters on this scan that we're going to do. Okay, we're going to put a price, and you can have lower prices than what we're going to put on. Because these scans, or the items that come back in the scan, we want to use for both bullish and bearish opportunities. I'm going to put it up a little bit higher. Some of you might consider getting in at a lower price on some of these stocks if you're going in a bullish direction. But because I want to use it also for a bearish direction, we're going to have a minimum price here of 40. So I'm going to say the last price is 40. And again, you could use different criteria. The other thing we're looking for is liquidity. That is such an important piece of our process that we want whatever we're trading, we want lots of option contracts to be exchanged. So we're going to put that in. Now the volume, if we pulled it off the stock filter, would mean today's volume. Well, you might want to run this in the morning. Maybe not that much trading activity has taken place. Okay, so we're gonna get rid of this study, and we are going to put on a filter. We're going to grab it from the study, and we're just going to pull volume here. So come down to volume, grab average volume, and the default is 1 million shares in 50 days. We're going to change that. We're going to go with 20 days because we're just looking short term. Who's having some good generation? And then we're gonna raise the bar here. Instead of $1 million, we are gonna raise it to 2.5 million. Okay, let me make sure all the zeros are there in the right places. So we've got 1, 2, 3, 2.5 million shares. Your numbers don't have to be that, but ours are going to be. Now, I wanted to expand our watch list a little bit here. And so the criteria I'm going to show you differs slightly than something that we've done before. Okay, first thing we're going to do, we want liquidity, so we're hoping the volume will help us here, but we're going to put it looking at a particular watch list, and we're going to intersect it with. So we're going to say, we're going to put this through the S&P 500. In the past, we did the S&P 100. Okay, so this time we're going to do the 500. And we're going to intersect it with a pre-built watch list called penny increment options. So come down to the public, and then N through R, and then penny increment options. And these are stocks that typically trade in penny increments, right? Versus a nickel or a dime or 20 cents or a quarter, okay? And that gives you an idea that there's a lot of liquidity, because then they have enough activity going on that they can trade in penny increments. For a trader, that's really beneficial. Okay, so I'm going to go ahead. We're going to run this first of all. Hit the scan button. Let's see how many stocks we got back. Whoa, we got back 112. Okay, I need to raise our number here. Let's go to 200 because I want to see all of the results. That's going to be a nice big watch list, which I did want to expand it, so that's okay. I'm liking this. Okay, we're going to go ahead and we're going to save this watch list, and we are going to call it what I call it every time, which is short verticals class. That's what the C is for, and then today's date, because then I'll know when it's time to update it, which we try to do about once a month. Okay, today looks like the 26th, so we're going to put the 26th on it today. All right, we're going to save that little watch list. We're going to bring it up over here, personal watch list. So we're going to go find short SV class. You know, I didn't name it the same thing, did I? I named it with an S at the beginning. I did not follow my naming mechanism. Where did it go? Connie, what did you do? We might have to name it again. I'm not seeing it here. But it's because I kind of didn't keep my naming mechanism here. Okay, I'm gonna resave this. Okay, I'm gonna call it class first. I put the C in the abbreviation. Okay, so I'm gonna call it class. And then I'm just gonna put short verticals and today's date 6/26. All right, we're going to save this. We're going to pull it up over here. All right, I'll go into the right one this time, class 6/26. There we go. And the stocks that we were looking at are here on this watch list. Sorry, I didn't mean to grab that. Class 6/26. Okay, that should be coming up here. Not sure why it's been a little bit tricky on me here. This is rude to do this to me 2 times in a row. It's been working just fine today. All right. Myron says maybe it's in a personal folder. It might be, but I just barely recreated it here with you guys, right? I just recreated class. So let's do this. I'm going to scan it again. It hasn't changed. Actually, this did change. What did this change to? To 58 from 200. We actually had more than that the first time we ran it, didn't we? So I apologize. We've got our last price of 40. I'm going to get rid of this percent change. And maybe somehow I put an extra parameter in there, and that's why it's not doing so good. This is all we need. Last price 40 in the last 20 days, greater than 2.5 million. Okay, we're going to scan it. Okay, right now it's coming back with 58. So This is better. Okay, we're going to go ahead. We're going to save it again. And I'm going to call this class short verticals. And I'm going to do today's date 6-26, and I'm going to put the year in here too. Okay, that's how I'm going to make it a slightly different in the year 25. Okay, so that's what we're going to go pull up. Go ahead and hit save. Come to our watch list. Come find our class. And we've got 6/26/25. All right, there's our watch list. Didn't need to be so difficult on us. Now, this is really focusing on, hey, where's the liquidity in the S&P 500? What stocks are they? And we've got a nice list of them. Let's also do the same thing here with the NASDAQ. And actually, when I ran this just now, my plan was actually to run it on the NASDAQ Composite second. And I think maybe I may have just run it here, saved it. Let's go change this. Now we're going to change it to the S&P 500. All right, as our scan in. So these are the NASDAQ stocks. We're going to scan in. And there could be some crossover. Okay, there's our 112 that we started out with. Some stocks are going to be on the NASDAQ and the S&P 100 or 500, right? NASDAQ or NVIDIA, Tesla, Palantir, so forth. So what we're going to do, we don't need them on the watch list twice, but we're going to let the technology filter it out for us. So what we're going to do is we're going to come up here to this row that is kind of above the flame, okay? It's the icon above and over from that flame. This is a index. And we're just going to say export, and we're going to say to Excel. Now, I have opened up a blank document in Excel for us to work with. I don't think you have to have that done, but I'm just telling you. So if you're trying to follow along with that process and do it yourself, then you know. And this just lets you know, hey, it needs to open up in Excel. We're going to open up that blank Excel document. And we are going to just do a Control V, which is a paste. And that basically took our exported watch list with a lot of data we don't need. We only need the ticker symbols, okay? Paste it into this watch list. Now we're just going to go grab the ticker symbols here. Now, the reason I changed it to the NASDAQ Composite from the NASDAQ 100 is we were filtering out some stocks that were non-financial, or that were financial. They were getting filtered out, and I wanted better representation in our watch list that we're using. So that's why the change. All right, we're going to take that here that we just highlighted, and I did a Control C to copy. We're going to import that into our new watch list. So we'll come over here to our class short verticals. We're going to say import. And then we've got a couple of choices here. We're just going to say paste symbols from clipboard, because when I did a Control C, that's kind of your computer short-term memory. We call it the clipboard. So you can see all those symbols coming up. And now we're not going to replace the symbols. We're going to add them to what we already pulled off a couple minutes ago. Okay, we're going to add them, and it's going to get rid of the duplicates. Okay, now we're going to have I'm going to say a watch list that has a little bit more variety in it as far as the sectors go. Okay, I think we're good here. Appreciate you guys helping me out with the naming that I didn't do as exact as I needed to. Okay, let's move on. So we have our watch list. It's going to be our go-to. We're going to use this watch list here for the next month. We'll also use it in my class on selecting an option strategy, okay? Because it's entirely appropriate, I would say, for any option strategy that you're doing for the most part. Most of the stocks are going to qualify to do it. I'm going to say at least 2-leg options. There might be some that if you're doing 4 legs, there might be some on this list that you're like, there's not quite enough liquidity if I'm going to do 4 legs. But 2 legs, we're going to feel comfortable taking any of these on the watch list. Now, earlier today, I was out looking at some of the results that came back here. And one stock that came back we're going to take a look at now this is going to be our second thing in the process, is identifying stocks that we're interested in. Well, the market's up today. I've sorted this by the percent change. So we're seeing who's up today in this list. We're going to go with PanW. It might not be exactly on the screen here. If it does, it'll highlight it. And PanW, actually, no, we're not doing that. We're doing Las Vegas Sands, LVS. Okay. If I scroll down on the list, it'll be highlighted here somewhere. There's LVS. Okay. Let's talk about technically what's going on with Las Vegas Sands. Been down trading, lots of stocks did, bottomed out. At the same time, lots of other stocks did, started putting in higher highs and higher lows. And here, just recently, it's been in a formation that we call an ascending triangle. And an ascending triangle means basically the tops are even, so like that 42, 43 area. And then it means the lows are getting higher and higher and higher, and it creates this little triangle. Now, if we were doing a swing trade or something like that, I know some of you may have been here for Mike Fairborn's swing trading class. He might use something like this in his class. We can use it just as easily here. What we'd recognize is today, it's breaking above that horizontal resistance. And some traders like to use that breakout of a price pattern as an entry signal. So we're going to use that here today. So let's go see what our choices might be. Okay, this is going to be the next step in the process. So we have weeklies here, which is always nice to see. It's traded 2.7 million shares so far today, so we love seeing that. Some of these weeklies will be really liquid, and some of them might not be quite as liquid. You know, and if we're saying we're interested in selling about 20 to 40 days worth of time, sometimes we need to go 20 to 50 days worth of time. We really have quite a few possibilities here. I already kind of picked through these, and we're going to use the July options in this scenario. Now, I did something else. You might be going, your thing looks different than mine, Connie. And what I did is I said, I only want to see the puts on our screen. You know, normally I'll have the calls on the left and the puts on the right. And sometimes the data kind of gets a little squished together. So today I thought I'll spread it out. We'll just only look at puts because we're bullish. We're going to be putting together short put vertical trades. Okay. And so we see on here, we have the delta, which we use, open interest volume, and what's the probability of it expiring out of the money. That's important to a trader selling short verticals, right? Now, delta choices. Some traders like to use a kind of a narrow range, you know, maybe a 30-something or a low 40-something or a high 20-something delta usually pans out for the kind of premium you might want to receive. There are some people that will base it on, you know, how many days are left till these options expire. Now, we're getting towards the short end of this window, right? At 20 to 40 to maybe 50 days. We're at 22, so we're kind of at the low end of that. So some traders might want to see at least 22% return or 1% per day that is left as far as the time goes. All right. Now, strike prices that I was looking to use here. Let's follow our deltas. Our choices could be 44, 39, or 34. Now, as we look at those, or 29, I'm looking also at this open interest column. And if I don't see a lot of liquidity, we're not going to use them, okay? That helps actually narrow down what we are going to use. So we're going to use this 4250 that has 1,200 contracts, and then we're going to be buying the 40 contract that has over 9,000 contracts, okay? We want to be with the liquidity. See these penny options? 36 cents by 43 cents, 106 by 111. Oh, yeah, we love that, okay? So we are going to sell this vertical. We're going to put adjust the strike price here from, let's see, we start out with 42.50 and we want to go up here to the 40. So we'll just change our 42 to 40. All right. That's going to bring us in a certain credit, and I'm going to lock it so we can do some math, make sure it's working well. Appreciate you posting that survey there again in the chat. We always appreciate it when you fill our surveys out for us. Just want you to know. All right. 65 cents. You would want to decide, is that a good enough return for me? We need a little bit of space here on our scratch pad here. So let's go like that, and I'm going to just kind of jump down there. It's a $2.50 white spread, so we take that into account, and we take 2.5 minus 0.65. That's going to give us our max theoretical loss. Okay. What is our max theoretical loss? Well, that's going to be what? We'll run it through the calculator. Most of you can do this in your head, but we'll just do a 2.5 minus 0.65 gives us $1.85. That's what our max theoretical loss could be. Okay, so let's type it in there, although I still need to keep the calculator here for a moment. Let's collapse our watch list. There we go. All right, then we've got 185. To determine what kind of return is it good enough return for us, we're going to take our max gain divided by that max loss. Okay, so we'll put in our 65, divide that by $1.85, and that's about 35%. So some traders might feel comfortable with that. Okay, we're going to go ahead, we're going to proceed with the trade. We're willing to risk in this account up to $1,500 a trade. It's a $150,000 account, so we've said, okay, we're willing to risk 1%. And so of that, let's go ahead and figure out if we could lose $1,500, not saying we want to, and we don't always actually risk $1,500. Maybe in conditions of the market that maybe aren't as bullish, we might lower that. We might say, I'm only willing at this time to risk maybe say $1,000 per trade. Okay, but we're going to go with a full $1,500. We're going to divide that by 1,500 divided by 185. No, that's not right. It's actually, yeah, it's 185. That says we could do 3 contracts. I know we've got a 3.6. Obviously, we can't do 0.6 contracts. We're just going to do our 3 contracts here. That math doesn't sound quite right. I'm going to do this just one more time. 1,500 divided by our max theoretical loss is of 185. Okay, that's better. 8 contracts. All right. Sometimes I might hit an extra digit. Okay, so we feel comfortable doing that, and we're going to do the same thing as far as our process. What's next? We're going to put in a buyback order. You can answer this out loud to me or to the computer or your dog, whatever, okay? We're going to do a first trigger sequential, and we want a chunk of that. We're going to say we're going to use 65% on this trade, or 70% rather, of 65 cents. If we can get 70%, only 30% is left. That means we're going to go buy it back at 19 cents. So we'll create our opposite order. We'll say, please system, go buy it back for us at 19 cents with a limit order. Let's make that good till canceled. We're going to go and put this in our bullish short verticals bucket. Send it on its way. Okay, we got filled on it. That's nice. We like that. Crypto Glenn, you're saying, will this be on a replay? It'll go through a short review when we're finished here, and hopefully it will get processed pretty dang quick. Okay, so if you missed any of the steps with the watch list process, you can go back and look at that. Okay, let's look at some other ones that came up on our list. Now, in my X post, I put in, what do these 3 stocks have in common? First on the list was MDB. I'm going to give you a chance to look at the chart. I'm going to tell you what it has in common. Look for something that's on the chart, okay, as opposed to stocks that start with the letter M. That's not it, okay? So you'll kind of have an idea there. It looks like this stock popped at earnings, kind of came back. You kind of had a little triangle-ish situation going on. Looks like it's bouncing off of that area right now. So that's Mongo database. And the other stock I had up there was, we're going to go with Boeing. Boeing, it's been in an uptrend. What did it do? It came back to support. Looks like it's kind of bouncing up here again today, doesn't it? And the last one I said, Airbnb. Airbnb. Okay. What does that look like? Got another triangle going on, which is interesting to note. thing that's interesting about this is it has that resistance at around that 140, 141-ish area, okay? Came back to the support, and it too is having a little bit of bounce off the diagonal support area, okay? That's what they all had in common. And I had chosen to do some trades for each of those ticker symbols, okay? So let's show you Airbnb now. On Airbnb, we've got a nice little bounce. Those of you that maybe don't know price patterns so much, this can be a third entry point that some people might look for. First entry is on the breakout. Second entry is if the breakout comes back and bounces right there at the breakout area. That's the second potential entry. Third potential entry, if there's some room to move, is down here off that diagonal support. Okay, so this, some traders might use as an entry point. We're going to go over to our Airbnb. We're going to use the July options here as well. You know, we probably really don't need that many. Let's maybe just pull up 20 here. Strike prices on this, I was looking, let's see if they still look good. Looking at, actually, I guess I did need all of those rows. Let's take it back to 30. We're going to sell here. We've got a delta of what? We've got a delta of 34 and 30 and 26, 37, 42. Okay. This one, the 34, seems to have the most open interest. These other ones are not super liquid, so we're just going to go out to the next liquid one, which is the 125. So we're going to do here the 130, 125. We're going to sell this vertical. We're going to go kind of through these steps kind of quickly as our time's running out here. We're going to change this strike price. We're going to take that to 125. Okay, only using the liquid strikes. And we've got a $1.23 credit. Okay, is a $1.23 good enough as far as a return here? Okay, so we're going to go $1.23 divided by 5 minus a $1.23 is going to be what? It's going to be $3.77. Okay, that gives us a 32% return. Okay, so some traders are going to like that. Yeah, that's more than 1% per day left on the trade. So put that little 30% there. On this, let's see what the chunk is. Okay, if we get a $1.23 initially, we sell that, it comes into our account. And if we can get, let's go with 75% on this one. Okay, if we can get 25% of it, or get 75% of it, 25% is left, we'll go buy it back for 30 cents. So again, we'll put in a first trigger sequential, create the opposite order. Going to put in that debit there, go buy it back at 30 cents. We've got most of the toothpaste out. Go ahead, get good till canceled. And real quickly, position sizing here, I think we can do 8 contracts. And I should have actually done that first. We'll go 8, and then we'll go 8. We'll make sure we're not risking more than max loss. Oh, let's see here. Do you know what? I was thinking 2.5 white. It's not 2.5 white. Okay, we're going to come back here. We're only going to do 4. Make sure to get the numbers the right way. In my brain, I was thinking it was 2.5 white, and it's 5. Okay, here we go. 4, and we're going to put it in our bullish bucket that we keep track of our stocks on, and off it goes. All right, we're going to be watching those 2 trades. And if they hit their targets before it actually happens, we'll be happy campers, right? We'll be like, sweet. I can, be out doing something else, not watching every single trade in my account like a hawk, right? Letting technical systems help us out. Now, all of you, I hope, are following us on our Trader Talks channel, okay? When you do, it just makes it really easy to find our content. So it looks something like this. I want to show you something we put in. We put in a couple things pretty new here. One is the schedule, so that you can see on a week-to-week basis who is assigned particular classes. And sometimes we'll have subs, right? If Barb and Kevin go to, and Ben go to workshops. And then we've got a new section here called shorts. And so we've got several short videos in here. Any video that is less than about 5 minutes is going to be on there. And then we have this one called bite-sized content, and it's a brand new watch list. Any video, short video that we do that's in the neighborhood of 10 minutes or left, it's going to be going on to this bite-sized content watch list. Okay, so as you're a subscriber, that makes it much easier for you to be able to find our content. Now, as we wrap up here, you guys, appreciate your attention. We're going to follow up on those 2 new credit spreads. We're going to use that new watch list that we created over the next month or so. All right. I'm going to encourage you to, one, if you like that process of building that watch list, go ahead, build it for yourself. And you don't feel like you have to update it every week, right? We're going to go update it maybe in a month. It'll change a little bit here and there, but not that frequently. Okay, so in about a month, we'll go review it. And then I'm going to say, if you're still trying to get comfortable with the process of short verticals, do lots of paper trading. Okay, you could take trades, our example trades that we had here today. You could go paper trade those in your account. You could take some off that watch list. You could take some that meet your rules, things that you're looking for specifically. Maybe you like to trade the $20 stocks for whatever reason. Maybe you have a smaller account or what have you. Okay, your criteria, you put it in place, but then just practice it. And you'll start feeling really a lot more comfortable with this, and just follow the process that I've been showing you here in our class. From the list, bullish entry, looking for strike prices that will give us a return we're looking for, and then process to go buy it back if we get a good chunk of that. All right, you guys, coming up next is going to be Mike Fairborn with script trade. Script. What do we call this class? ThinkScript, right? ThinkScript studies. He's going to be working with you on that. He always has some really good information. So stick around for Mike, and we will see you next week. And again, if you'd fill out that survey for us, we always appreciate the time you take to do that. We'll see you next week. Bye-bye.